What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm still battling this cold, obviously, and I'm trying to switch things up. So I'm actually going to do responses as to what you guys say and want and request, and then I'm going to request the stock. So this is something new that I'm going to start doing this year. I'm going to start doing this, and let me know what you think at the end of this video. So, Stan asked me, being someone who has researched mini REITs, what would happen? Would you happen to have any quick thoughts or a YouTube video on Kite Realty Group? KRG is a symbol. So, I'm going to review these guys, and it's a very interesting real estate investment trust starting to make a comeback. So, if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check this REIT out right now. So here's Kite Realty Group. They're sitting at 21.27. They're trying to make a comeback against the S&P, or at least try to keep in line with them. They were tore up during the pandemic, which is kind of understandable. Dividend yield is 4.51%. PE ratio, really, we don't care about PE ratio, of course, because FFO and AFFO is very important. Average volume is 1.53 million. The market cap is 4.66 billion US dollars. D range is 1642 to 2335. Stay range is 2103 to 2158, and its previous close was 2105. So again, in the past 5 years, see when the pandemic hit, they were at 724. And now they're at 20, let's just say 21, 26 right now. So let's check these guys out first. So Kite Realty Group is a real estate investment trust headquartered in Indianapolis, Indiana, one of the most largest publicly traded owners and operators of open-air shopping centers and mixed-use assets. Company's primarily grocery-anchored portfolio is located in high-growth, warmer, and cheaper markets and select strategic gateway markets. The combination of necessity-based grocery-anchored neighborhood and community centers, along with vibrant mixed-use assets, makes KRG portfolio an ideal mix for both realtors and consumers. Publicly listed since 2004, KRG has nearly 60 years of experience in developing, constructing, and operating real estate. Using operational investment development and redevelopment expertise, KRG continuously optimizes its portfolio to maximize value and return to shareholders. So let's see what they bring to the table. The one thing is these guys are huge. So that's pretty big. That's a pretty strong portfolio. So some of their buildings that they have, like right here, I'm just looking at Arcadia Village in Arizona, like a CVS pharmacy. There's some information with Bay Point Commons. I'm just looking at some stuff that they have there. Bridgewater Marketplace. So TJ Maxx. I'm just looking at some of the things that they just have photos of. Best Buy. These are just plazas. Costco, I mean, that's always going to be busy. Chapel Hill Shopping Center, Circle East. Office Depot. So it seems like they have some pretty good tenants. And of course, Kroger right here is pretty strong. So they have Kroger, TJ Maxx. These are companies that people go into. Dick's Sporting Goods, Trader Joe's. Just looking at some of their buildings that they have in their plazas. This is a lot of plazas. So they're well diversified. They even have AMC there. There's Publix. That's another one. I'm just looking through a few things that these guys have. PetSmart. We got the Fresh Market. I'm just looking at a lot of things that they have. Home Depot. So there's a big plaza right here with Home Depot. So it looks like there's a Target right there. So they have Target, PetSmart, BJ's. So a lot of these places are pretty popular. Whole Foods Market. Again, just scrolling down through everything. They got a Nordstrom, Old Navy, Best Buy. So it seems like their occupancy rate is pretty strong. And I'm just looking in a few of these. It says there's like 2 spaces available, 2, none, 2, none. I mean, there's one space available, there's none right here at the corner. So they have a pretty strong diversification. You got an Earth Fair. I haven't seen an Earth Fair in a long time. So I'm just looking through a few of these. Now, let's check out their revenue. So here's their revenue. This is in millions US dollars. 2015, 347, 2016, 354, 2017, 358, 2018, 354, 2019, 315, 2020, 266, and then 2021, 373. Now you can blame the pandemic. Shopping center places got crushed. I mean, that's a no-brainer right there in 2020. The revenue is up in 2021. Now, right here, there's a decrease in revenue from 2018 to 2019. 2021, it's way better than 2015. So there is an increase in revenue. Now, the big thing is these trends right here. I mean, I look at things very basic when it comes to revenue, too. The revenue's not up. Usually there's not a chance for a dividend hike. As you know, with a real estate investment trust, 90% of what they make have to go back to shareholders. So let's look a little bit more into these guys. So I'm on their website. So here's some financial information. So their net loss, the third quarter financial results, net loss attributed to common shares of 7.8 million or 0.04 cents per diluted share compared to the loss of 7.0 million for the quarters ending in September 22 and 21. Generated FFO as adjusted, the operating partnership of 107.7 million or 48 per diluted share represents a 45% share increase over the comparable period of 2021. All right, so that's not too bad. So let's see, the portfolio operations cash leasing spreads of 30.7% and 22 comparable new leases, 8.5%, and 134 comparable renewals, and 10.8 on a blended basis. So I'm just looking through a few things. I mean, it's not bad. So company is raising its 2022 guidance for FFO is adjusted by 5 cents, the midpoint from 186 to 190 per diluted share. So increase the same property NOI range 4% to 5%. I'm just looking a little bit in depth with those guys. So again, you know, these guys are starting to make a comeback, and I'm going to show you their dividend history. Let's start in 2009. They were 6 cents. 2013 and 2014, 7 cents. Then they jumped up to 26 cents in 2014 to 27 cents, 29 cents, to 30 cents to 32 cents. A little stagnant for a while. 2020, you can blame the pandemic, 5 cents and 8 cents and 15 cents. So now they're at 24 cents. So they were in the 30s, and then they cracked down to 24. So the payout ratio is 45%, and the number of dividend increases in the last 5 years is 10. Dividend growth in 5 years, blame the pandemic, negative 16.34%. If you bought one share, you made 88 cents with a 4.18% dividend yield. So the pros are they're generating revenue better than 5 years ago that I showed you. They are hiking their dividend. I think they're well diversified and they're huge geographically. And of course, this is not financial advice for entertainment purposes only, disclaimer in the description. This is one I'll probably closely watch. They had a few issues in 2018, 2019 with their revenue. And you saw it with the dividend trends. So, I don't know. I'm kind of iffy on this one. I mean, I'm not trying to pump a stock. I don't pump stocks. I don't, if I really feel really confident in a stock, I'll really tell you. I have some confidence in these guys, I just want to see a little bit more um, dividend growth rate, excuse me. I can barely breathe. And it's still a pretty attractive dividend stock. I mean, I wouldn't completely rule it out. I mean, if you want to put that in your portfolio and you start seeing dividend growth, I mean, that's great. I like their diversification. I think that's huge. But you know, if there's a recession, who knows what'll happen? You know, with a lot of these spaces, a little bit more digging needs to go against these guys. Excuse me, and doing your due diligence. Uh, it seems like they have some pretty strong companies that are paying rent. That seems like there's a lot of stability and security. So I'm still going to closely watch this one. I still think this is a good choice. I just have to do a little bit more digging and probably see, probably in a year or two, if these guys are worth it. Because I have a lot of real estate investment trusts in my portfolio. I think this is a pretty decent choice as long as there's dividend growth. That's the most important thing. Revenue, FFO looks good, AFFO, and dividend growth. I think their portfolio is strong. So let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Hope you enjoyed my video. I know I'm barely able to breathe doing this video, but you guys take care and have a good one. And I'm going to try maybe for a video tomorrow. Don't quote me on